Hello, everybody. C. Ray Brower here, finding your perfect home. Got Leah Garcia today. Before we get started, I want to say like, follow, share, ring the bell, subscribe if you like what you've been seeing. And Leah, what did you want to tell everybody before we come back next?
When we come back, I'm going to tell everybody what is the best life insurance policy available. Number one, I'm going to give you the skinny, the number one best life insurance policy when we come back.
That's wonderful, and we'll be right back now. Hello, everybody. We are back, and it looks like I made the mistake of not unmuting my microphone before we got started. So, C. Ray Brower with Finding Your Perfect Home. We've got Leah Garcia on. I know you heard her say she's got the best life insurance policy possible. And I'm going to say one more time, like, follow, share, hit the subscribe button if you enjoy what you're seeing. Go ahead, Leah, let's find out all about this great life insurance policy.
Thank you so much, C. Ray. I appreciate the time. It's always a pleasure and an honor to share the stage with you. Well, my name is Leah Garcia, and I represent World Financial Group, and I'm one of the leaders on one of the largest divisions is Pinnacle Elite, and we have access to many specialists. And so what I want to share with you, people often ask me, Leah, which policy is the best? Which company is the best? Term, cash value, whole life, like all these things that I'm going to tell you right now, the secret. Are you ready? I'm going to reveal it here right now, this moment. Mic drop.
The world will know now.
You'll know now. The best life insurance is the one that is in place when you need it.
That's right.
That's it. Now, is that term? It could be, is it cash value? Is it whole life? It just really depends on what you're trying to do. You want a policy that will be there, whether you live too long, die too soon, or get sick. And a majority of the time for my clients, it is multiple policies, layers of benefits. Because when you're younger, you do need more death benefit, and term is so affordable. But then we never know how long we're going to live. And by the way, back in the day, we lived to 60, 70 years old. Now we're predicted to live to age 100 and beyond. Yeah. So having some type of permanent coverage, but also maybe a term that is convertible option, because if you live to the extent of the term and you're still alive and healthy, maybe have that option to convert it to a more permanent policy. So that's the skinny. Was that great?
That is great. You brought up a question I'm going to ask now. So I've got a term policy. I've got a 20-year term, and I'm in good health at the end of 20 years, and I want to convert it. Does it convert at the same price, or does it convert at the new upgraded price because I'm an older guy now?
Great question. So generally, conversion means no medical testing required. So there will not be any additional medical questions if your health has changed. Maybe you were, in one health and now your health has waned a little bit, which I know that's not you. But if that were to happen, they would still require to accept you and convert the policy. Generally, you can convert the entire amount or a portion. That's generally how it works. But it will be at your new age. So
I assumed that, but you know what assuming does.
Yeah. It actually will be more costlier as we get older, and maybe more baby boomers. Often baby boomers bought the term. They were under the impression buy term, invest the difference, which, a lot of people still subscribe to that.
Right.
But really what happens is when you live longer, what are options? The insurance is very, very costly. 2 to 3 times or even more, or even sometimes you're uninsurable. Maybe they've had a health event, cancer, heart attack, stroke, or something that's caused them to now be uninsurable. And I've seen that happen. And that's really where I kind of turned the corner on exploring how cash value policies could really be more permanent and on different for different needs for sure.
Sure, sure. That is the thing. You have to work with what your needs are, not what
Right.
you think you need. Actually, do the investigation, answer all the questions, ask all the questions to make sure that you understand exactly what you're buying, as well as how it's going to work in the future.
And that doesn't require that you become an expert. It's just understanding the basic concept and what you're trying to achieve. And a specialist will help you to do that. They'll help to make it really, really simple. And then they're going to work on the advanced planning. But when it comes to
Sure,
advanced
sure.
planning, C. Ray, really important is that, I always say I'm not a jack of all trades, but a master of leverage. There are so many different types of life insurance, so many different companies, so many different offerings. There's no one person that can know everything. It's just not possible. I
Right.
leverage a team-based model and access those specialists who really have that advanced knowledge. And at the same time, you need to have the infrastructure in place, meaning that when it comes to advanced planning with life insurance, you need to have your CPA that's going to be communicating with your other specialists. They're kind of the head of that. So then you also need a tax attorney, an estate planning attorney, and a life insurance agent that is life and health licensed. This is very important because there are some of the living benefits that the insurance agent cannot provide to you if they don't have the health license along with it. Those licenses are meant to work together.
Okay.
So when
Okay.
we're talking
That makes a lot of
about,
sense.
yeah. So that advanced planning, you really should have those specialists in place, and they should be communicating and working together, strategizing to find the right solution for you, because there are many different offerings, many different companies, and many different ways to structure life insurance.
Very good. Very good. Perfect. Well, today we were actually going to be talking about how business could use insurance, right?
Yeah, definitely. There are some advanced planning available for business owners.
Very good. Very good. And I guess the first one that probably would come to mind would be the life insurance retirement plan, and
Yeah,
how
that's
that
very,
would
very
help them
popular.
save money today as well as have money in the future, right?
Right. Now, remember, we're talking about cash value life insurance, which is highly regulated by the tax codes. It has to be properly structured. And at the same time, this is investment grade tier one capital. So we're talking about advanced planning. So life insurance retirement plans, LIRPs, you might have heard them called many different things. They're called like infinite banking, family bank, bank on yourself, laser fund, rich man's Roth. There's all kinds of different sexy names, but they all are alluding to cash value life insurance in some form or fashion. Now, how is this beneficial for a business owner? One thing I think of is if somebody is maxing out their traditional retirement plans, maybe they're maxing out their IRAs, this could be an additional option to put additional dollars away. At the same time, maybe their income exceeds the thresholds and they're no longer eligible to contribute to an IRA. So this can be an alternative to that. Also, there's some great benefits. It has a lot of flexibility. I just helped a family, and their monthly premium was $3,000 a month. Well, it had the ability to have that flexibility, and they could drop it all the way down to about $500 a month. At the same
Wow.
time, they could contribute up to about 46,000 a year. So that flexibility is amazing, and I always strive to try to make it as flexible as possible. So those are some of the benefits. Also, because it is not a qualified plan, you're going to put the money in, you're going to pay the taxes right now today. But when you access that money, it will be tax advantage, right? It's not tax exempt, it's tax advantage. You do still have to follow the codes. And when you access the money, here's the key part. Here's where it gets really, really exciting. And IRAs don't really do this. or 401ks is that you can take out the money you contributed and take your money out. Cost basis, really, really simple. You can also have this into a benefit that pays you income for the rest of your life, kind of like a pension.
Okay. Kind of like an
And
annuity.
kind of like an annuity, absolutely. In addition to that, there's something that is very rarely talked about. So you can take what's called an alternate loan, meaning you are not taking out your own money, you're going to borrow from the death benefit. It's kind of like using the same money twice. The
Mm-hmm.
insurance company knows you're going to pass away at some point, so they understand that they're going to pay that death claim. They give you the option. You can borrow the money now or wait until you pass away and borrow back from the death benefit. So it can get really, really complex, but really just think about it this way: flexibility, tax advantage, and also you can convert it into an income for life and have some living benefits like critical illness, chronic illness, and even long-term care riders. So that's some of the great advantages for somebody who does own a business. Great
Very
question.
cool. So you're borrowing against the death benefit.
Yes,
Um, I'm sure there's some kind of a entrance premium to do that
there
that
is. That's
comes
right.
out of the death benefit. So we'll just use a big round number of $1 million, and I want to borrow out $5,000 a month out of that, meaning 20 or that'd be $60,000 a year, and that just comes off the top of the $1 million.
Correct. Now you will pay interest on that, but it is another strategy. It's leverage. So, say the insurance company charges you 4% to borrow from the death benefit, but you have a business opportunity, investment opportunity where you could earn 10, 20, 30%. It's leverage. So, it doesn't always make sense, but having the option, only a few companies allow that. So, you do,
Okay,
if that's something that's important to you, that would be a question to ask. Can I take alternate loans from this policy?
very cool. Very cool. And what about premium financing for owners? What does that look like, and what is the benefit to the business owner to do a premium financing?
Well, premium financing has pretty much been for high net worth, high income earners, somebody making 10 million or above. There are some new options that are for somebody maybe making more like 200,000 or more. And premium financing is literally what this word sounds like. You are going to have a bank finance a portion of the premium. Now, why
Okay,
would you do that? Maybe you're a business owner that you have tremendous assets, but you're cash poor. You don't have the liquid assets to pay the premium today, but you need a large death benefit. And it is a borrowing. You are borrowing. The bank is paying the premiums, a portion of it. So you do have to pay that back. So you must have an exit plan. So maybe it's somebody that at this point, cash poor, but they're expecting to have huge proceeds from their business. Maybe they're going to be selling their business down the line. So if you are more of a high net worth, you like the idea, but you need more funds for retirement, but you don't have the dollars to contribute consistently, this could be another option. But again, you have to have all of your specialists in place, your CPA, your estate planning attorney, and your tax attorney, and your licensed insurance agent. And by the way, you want somebody who specializes in that, right? I'm not a jack of all trades, but a master of leverage. I can access some of those specialists for you folks.
oh, very cool. Very cool. I like that. I like that. That sounds like a great option for some people.
It's advanced, it's not for everyone. But again, these are strategies you can't do with a term policy. These are advanced planning. That's why when somebody says, well, I don't believe in term insurance, I say, probably respectfully, with all due respect, you probably don't understand the benefits of a true structured properly cash value life insurance, especially when it comes to somebody that is high net worth or business owner, self-employed entrepreneur, stuff like that.
Sure. I can appreciate that. Very cool. What about the key man policy? What is a key man policy, and what would be the benefits, and when would something like that come into effect for a business owner?
So, key man policy is for somebody that you have in your business and they have some kind of specialized skill or knowledge. And if they were unable to work, say they got sick, they became mentally incapacitated, or they were to pass away, it would interrupt your ability to conduct business. So the beneficiary is the business, and that gives the business money to be able to hire somebody, recruit somebody, train someone to take the place of that key person. You know, a lot of contractors, especially, they invest a lot of time, energy, and money to train their key
Sure.
employees. And that specialized knowledge may take years for them to accrue. So if that person should get sick or pass away, it would greatly impact that contractor. So it's an option that if you do have that specialized knowledge, that special skill, that's a way to protect your interest in the business.
Very nice. Very nice. Protecting your interest in the business, key man policy takes care of that person. Is there any benefit if, let's say, I owned a business and we had an earthquake and my building fell down? Does that key man policy pay my key man while my building's being rebuilt?
No, but that's a great question. Not unless they were unfortunately killed during the earthquake or they were injured during the earthquake. Right? Hopefully not, but you know, it could happen. Hey, those earthquakes get pretty serious. I was in that Loma Prieta, boy. That was no joke.
I when the Loma Prieta hit, I was in the shop. We were closed up. I was doing book work, and all of a sudden it started, and I could feel it a little bit, and I could hear the lifts out in the shop. They were 4-post lifts, and so the cars on the top were banging back and forth, clang, 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 clang. And of course, there's cars underneath, and it freaked me out. So I went and looked, wondering if one of the cars was going to fall off the lift and fall down on another car or what. But yeah, it was crazy. It was crazy.
Yeah. I was a hairdresser at the time, believe it or not, working in downtown Los Gatos. And anybody who knows downtown Los Gatos, there's a lot of older brick buildings, and a lot of the buildings collapsed. So we were all running out, trying to run out of the building because I was working in a brick building at the time, but it was like you couldn't go anywhere. We're like trying to run. We couldn't, we're just like, we're, you know, just there with the earthquake shaking, and it was pretty scary.
Yeah, that is, man, bricks falling around you, windows breaking.
It was amazing. Yeah. Thankfully, everybody was okay. But that was a great question. I love that question.
So it would take a separate kind of policy to keep your key employees paid while the business was down and out.
Right. Yeah.
It wouldn't be a life insurance policy. That'd be more your standard business coverage.
Right. Business interruption, disability insurance, things of that nature. Yeah.
Cool. Okay. Very cool. Very cool. What about buy-sell agreements being critical to addressing ownership transitions and ensuring the business stability should something happen?
Yeah, that's something that a huge mistake that I see so often. A lot of people create a partnership and they go to an attorney and they have a legal partnership drawn up. And it talks about how to exit the business. It talks about, you know, their cost basis and the different options if they were to retire or leave, but it doesn't have the funding. So life insurance is actually the funding that if something should happen to one of the partners, so it could be 2 or more partners, meaning that if something happened to one of the partners, if they got sick, if they died, if they became incapacitated, now that money could be used to buy out the family the family's portion of that business, because otherwise that means that that other business owner or other partners would have to come up with the dollars to buy out the other partner's family. So oftentimes,
that makes sense. Yeah.
yeah, because oftentimes if they don't have the money, they have to end up dissolving the business, solving the business, selling the business, dissolving the business altogether.
Right. So that they
So
could
that's
pay
a
off
huge,
the other family.
right. Exactly. So that's something I see. That's something I see is overlooked so often. They go to the attorney, they establish the agreement, but they don't fund it. So that life insurance could be part of that funding, that exit planning.
The part of the exit planning, so that the business was paying the insurance premium, so that when the inevitable happens, I mean, we all are going to get sick, we're all going to die, we're all going to, something's going to happen to us. This is life. It really, I mean, we all want to be Superman and live forever and all of that, but there, the saying, death and taxes. It's going to happen. It's going to happen. So you need something in place, and that makes a lot of sense to have an insurance policy that the business is paying the premium, so that when either partner or 10 partners, whatever, one of them passes, the other people can not have to liquidate the business to be able to pay out to the family of that business owner, because they can no longer do their job, which I wish that my my past brother-in-law, deceased brother-in-law, had that kind of stuff in place when he got into a partnership, big senior care partnership down in Los Angeles, and he passed away with AIDS. He hadn't let the partners know when he got into the partnership that he was infected, and when he passed away, it was his portion was left to my wife, and there was nothing in place, and he hadn't informed them. So one of the other partners owns one of the biggest, tallest buildings in downtown LA with the law firm on the top of it.
Wow.
And so we got nothing. Wow. There was nothing for us to be able to fight with against somebody with that kind of funding behind them, and there was nothing in place. So what should have been a great thing for my wife and I to be able to either continue in the partnership, because she's a nurse, a registered nurse. She knows that side of the business. She could have actually helped the medical side of it. Of course, I'm pretty good with managing and taking care of that the other side of it, the business side of it. It could have been a good thing for us.
Right.
There was no provisions had been made because he didn't inform the other partners. So
yeah, there's no provisions to protect his asset. Yeah.
And what about an executive bonus plan to incentivize the key employees of the business with your life insurance policy? How would that look?
Well, executive bonus plan IRC 162 could be used to recruit, reward, and retain key employees. So aside from a traditional plan where it has to be the same for everyone, you could literally reward a particular key person, highly skilled, highly qualified. You could also use it to recruit them. It's an additional bonus to them. At the same time, you could have it where it has like a golden handcuffs. So it has a vesting period, and that incentivizes them to stay with your company, maybe 5 or 10 years, so that you're investing this time to train them and develop them what's to keep them from going across the street to your competitor if someone offers them an additional $5 an hour? So this protects your time that you're investing in them. Also gives them some additional tax-free benefits right at the end. So it is a retirement plan. At some point, it will become owned by the employee. That's the intention of it.
But initially, it's owned by the business, and there's provisions in it for, like you said, 5 years or 10 years or whatever
It
that
could have it.
business
Yeah.
pays into it.
Right.
And then
So
then
the
they
business
own
owner
it. Do
does
they
pay the premiums.
they take
I'm sorry,
over
go
the
ahead.
premium, or the premium's all paid up when they take it over?
It depends. So you could structure it as it's paid up after a certain amount of years, 5 years, 10 years, or they could at that point take it over. So there's a lot of different customizations that is involved. It really does involve a team, is what I'm saying. But if you're looking for a way, if you're a business owner and you're looking for a way to recruit top talent, retain your top talent, and to really reward them, executive bonus plan could be a great option.
I can see that. I can see where that would be a really, really great option. That's an amazing idea. I hadn't even thought of anything like that. That's yeah. Especially so. Would that be a term life? Would it be a whole life? It could be any of the above.
It could not be term because it has to have some kind of cash value attached to it. So it couldn't be term. It could be a whole life. It could be an index universal life or any of those permanent policies.
Okay.
Good question.
Yeah, I guess that it wouldn't be much of an incentive if you weren't getting nothing out of it, huh?
Right. If it's a term policy, there's no cash value, there's no vesting period. So, but that could be offered as an additional benefit because that does have benefits for the family and also has some living benefits. But really, when we're talking about advanced planning for business owners, we're generally talking about permanent cash value life insurance.
Okay. Makes a ton of sense.
Yeah.
Well, thank you so much for your time today,
Wow,
Leah.
this
It
was
is
a deep
always
one.
great. We got dug in today. Yes, we did. I always appreciate you coming on. Yes.
Yeah, you asked for some great resources. So Money, Wealth, and Life Insurance is a great book. If people want to reach out to me, I'll send them the PDF. There's also some really great books. You can deduct that by Diane Herman, CPA enrolled agent that I work with. Also, Tom Will write. This guy writes all kinds of great books. So there's a lot of great resources. Not that you need to know everything, but if you're somebody that you want to learn a little bit about it, these are some really great resources. I think there's another book too, like what your CPA isn't telling you by Mark J. Kohler. So that's another really good book too. I got the Audible on that one too.
Some good resources. CPA isn't telling you?
It's called What Your CPA Isn't Telling You by Mark J. Kohler. Kohler.
P?
K with a kite.
Oh, okay. Perfect. Well, you heard it from Leah. If you want the PDF of that, what was the name of the book behind you there?
Money, Wealth, and Life Insurance.
Money, Wealth, and Life Insurance.
Reach out to me and I'll send you the PDF.
Perfect. Her information's been scrolling down below. Leah, thank you so much. Go out and be the sunshine in somebody's rainy day. Everybody, remember to like, follow, subscribe, ring the bell, do all the stuff. I don't know where you're watching this today, but make sure and check it out. And everybody, remember C-Ray to find your perfect home. We'll talk to you all real soon. And thank you again for coming on.